Median home prices in Ada County take a hit, while Canyon County is actually starting to show some signs of potential stabilization. Inventory starts leveling off, if not coming down in certain categories, and the Fed is going to have to get more aggressive as we roll forward to combat inflation. Let's go ahead and tackle all of that in this episode of Mikey's monthly market updates for August of 2022. Let's get to that right after this. Hi there, everybody, and welcome back after the break. Mike Petrus here, your Star Realtor of Star and the Treasure Valley, back with another episode of Mikey's monthly market updates for August of 2022. Now, of course, if you are new to this channel, this is going to go ahead and break down what is happening in the real estate market right here in Ada and Canyon counties. Of course, if you have subscribed already to this channel and you are familiar with what's going on, you'll know that we're going to go ahead and break down the data and be able to show exactly what is happening in terms of how this may be able to affect your decision of whether or not you're considering buying, selling, or investing right here in the Treasure Valley. So let's go ahead. Let's dive into all that information. All right, everybody, let's go ahead and let's dive into the data and start off with Ada County as we normally do. And if we are taking a look at what happened in the median home price overall here in Ada County, we could see that it took a sharp turn to come on down. In fact, actually this month as compared to last month, it dropped a whole whopping 4.2% compared to the 2% that we were looking at last month. So Ada County definitely took a hit overall in the total single family homes for sale out here in the Treasure Valley. But as we can see, we're still above the beginning of the year. In fact, actually, we're about 5.3% above the gains, which was at about 11.52% that we had since the beginning of the year in the total single family homes here in Ada County. So there's still some room to go in order to come back down to, say, the gains that we made in January. But are we really going to get back down that low? And maybe once we start getting to Canyon County, Ada County is probably going to end up following the same pattern and more or less go to stabilization probably before that happens. We'll just have to wait and see. But as I've been predicting, I would think anywhere between 5 to 10%. But now that the Fed is actually going to have to get more aggressive, that actually kind of throws a monkey wrench maybe into that. And maybe we can expect our markets to go down a little bit more. We will just have to wait and see. But Canyon County right now is actually showing signs of some pretty cool stabilization, which we'll see a little bit later on down the road. So the prices might not be coming down too much more. We'll just have to, again, wait and see. But overall, this month, we are down 6.20% since our peak at 602,250 back, it looks like in May of 2022. And let's go ahead and just kind of look at the 6-month breakdown. Yes, it was May of 2022 when we hit our 602,250. And of course, we could see that we shot down to 565. So the prices definitely did come down, and Ada took a rather large hit, overall this month. So let's take a look at the actives versus solds, and we'll go ahead and we'll figure out, how much inventory that we've got in terms of month overall. We can see that the active inventory for the month of August was sitting at 2,074. And we can see that the buyer's demand was actually ticking up a tad there. And we sold a total of 732 homes over the course of the month, which puts our total month of inventory at 3.24 months of inventory. Now, you might be saying, well, hey, Mike, isn't a buyer's market going to be 6 months worth of inventory? Well, really kind of not in this case. The buyer's market has cooled to that point that really you can see sellers out there, and the days on market have been up. The sellers out there are doing drastic price reductions, or they're reducing their price. We can see that negotiations are coming back in the ways of buyers, even after price reductions and even concessions. And concessions meaning picking up closing costs, giving money to the buyer to maybe buy down rate. And those are strong indicators of a buyer's market. And currently, I believe that we're in one. I think that we've seen the gap kind of create itself. We see that the pendings have been going down, so there's not a lot that are under active contract right now coming through the month of August, as say that we saw back a year ago. But we also see the inventory starting to kind of tick the other direction. Now, why would the inventory really kind of be ticking the other direction? And technically, I think it's just because the holiday seasons are coming up around the corner. So we can kind of expect not a lot of people wanting to sell. And we can also probably see the buyer's demand start to cool in the same aspect, because who really wants to be buying and selling during the holidays, even though it's really the best time, because you get the most motivated sellers and the most motivated buyers during that time. So if you're looking to buy or sell, keep in mind, holiday seasons are good. I know it rattles the seasons like Thanksgiving and Christmas, but at the same time, it is a good, effective way to go ahead and sell your home, because you really get some dedicated people. Just looking at the overall total inventory, just in another graph, we can see that it's kind of ticking down than what we had last month, but we saw that we really shot up, since March. And then now we're kind of ticking back the other direction. We'll just have to wait and see where the inventory is going to go. So if we're looking at existing home inventory, we can see that we had a sharp turn in that, and we're sitting at 1451 active total listings on the market for the month of August, and 536 total sold in August, which sits us at 2.7 months of inventory. But again, we are still in a buyer's market, as we talked about. And if we're looking at the new construction inventory, now the new construction inventory has really kind of superseded the levels that we've seen back since 2019, September of 2019. And the active listings that they have in new construction is sitting at 923, and they really only sold 196 units for this month, which is actually really sitting the new construction inventory now at a whopping 4.7 months worth of inventory. All right, so as I've been kind of introducing into Mikey's monthly market updates, we're going to go ahead and take a look and see really kind of, who was the biggest kind of loser, more or less. Sorry, I had to look at my screen there, and I was like, wait a minute, am I lost? Who was it? Existing homes that kind of took the biggest hit over, or has been taking the biggest hit in median home price overall? Or is it the new construction aspect? Well, if we're taking a look here at the existing homes, we can see that we hit our peak of 586,750 back in May of 2022 this year. And now we have hit with the median home values overall for on existing homes in Ada County is sitting now at $530,000. So that is a loss of 9.7% actually overall in the existing homes, but yet still we rose by 14% on the existing homes since the beginning of the year, which really there's about 4.3% still to go. But if we're looking at the dip, when was the biggest dip that we took in existing homes? It was really between June and July. We only lost we lost $19,000 in between July and August. So can we start seeing maybe signs of stabilization coming in there to where we meet that 5-10% mark where it stabilizes out? And then after it stabilizes and the economy, of course, figures itself out, inflation starts coming down, the recession hits, which brings down interest rates. Can we start seeing an upwards growth, maybe around quarter 2 of next year, or maybe even late quarter 1? We could very well. We could start seeing property values go up 3 to 4% on a normal scale like they normally do. So buyers, keep that in mind as you are looking, or even sellers, keep that in mind. But existing homes did take a whopping hit, over the last couple of months here in Ada County. But if we look at new construction, one of the biggest things that really shocked me was looking at May of 2022 at 639,105, and then bam, in June, it went up to 690 for the median overall home price. I just want to kind of define median overall home price. Again, it's you have the top value that sold, you have the bottom value that sold, and they pick the number right in the middle. And then, of course, you got your average sold prices on the top, which is just going to be an average. But bam, boy, did that hit up. And then it came back down in July, as I kind of figured that it would. But what shocked me is that looking over here in August, we went up again. We went up to 683 for a median home price of a new construction home in Ada County. So really, since the beginning of the year, new construction's only lost 1%, 1% in the median overall home value. And if we're looking at, we rose 17.2% since the beginning of the year in January, really there's another 16.2% to come on down. So if you're shopping out in Ada, looking at an existing home is probably where you're going to get the better deal in this aspect at this point. Okay, so let's go ahead and let's take a look at the days on market. Of course, we have been going up year over year. We're sitting at 29 days on market. So it's just kind of rising as a lot of these existing homes or even new construction home inventory is sitting as the buyer's demand does cool. So I anticipate especially this number to continue to go up during the holiday season when we can see not a lot of people maybe listing their homes comparatively, and a lot of buyers even jumping out because of the holiday season. So we'll just continue to watch that number. But again, cancels are on the rise. Maybe some people are falling out of contract, and they just have to cancel their contract because their financing wasn't really working out on the buyer's end to be able to purchase a home. Or maybe there's sellers out there that are just kind of getting cold feet considering what is going on in the market, and they're just pulling their inventory off of the market and waiting for whatever happens in the economy to be able to work itself out. Okay, but let's just go ahead and recap. The median sales price for this month of August is sitting at 565. The total homes sold were at 732, 22.2% down year over year. The inventory still is up year over year by 111.2%, sitting at 2,374 homes on the market, and the days on market 107.1% year over year on the rise. And I do kind of continue the days on market to hop up. All right, let's go over to Canyon County over here. So as we can see in Canyon County, we had that really, really huge dive, between March and May, leading kind of into June. But now we're seeing that start to flatline itself. And as we take a look at the numbers with existing homes and especially new construction homes, it really kind of makes the case for stabilization coming to Canyon County. And honestly, I think whatever kind of happens in Canyon County will eventually filter its way over to Ada, and we can almost expect Ada County to have the same kind of pattern. So this month overall, we'll just get to the 6-month pattern. If we take a look at the median home prices, you can see we had that huge hit from April of 22 all the way into about June. And then it started leveling off July and August. And between June and July, it lost about $3,000 overall. And then this month, we've only seen $1,000 reduction. So really, from this month, there has not been that much of a loss in the median overall home price in Canyon County. But all said and done, Canyon County, for the total single-family homes out there, did rise by 12% since the beginning of the year. And as of now, since the beginning of the year, since our peak that we had, at April of 2022 at 476,500, we have lost 7.45% in the median overall home value for single families. All right, so let's go ahead and take a look at the actives versus solds. Again, 1,336 active homes were on the market for August, and 389 of those sold. And we can kind of see that the buyer's demand ticked up a little bit, but overall has just been kind of coming down, which is really kind of resulting in what we have going on. Plus, if we look at the pending sales in the orange line here too, you can see that's been on the way down since like peaks that we had over, say, like a year and a half ago. But our months of inventory for the total single family homes that are out there is sitting at 3.43 months. And we do know that we are still in a buyer's market, talking from over in Ada County. And again, just kind of recapping in a different graph, we saw the inventory really shoot up, and we see it kind of turning the corner, coming back down, because I'm thinking more or less the holidays are coming around the corner, and maybe not a lot of people are looking to list their homes, but cancels also do come into play with that too. Looking at the existing home inventory over here, just got to move myself out of the way real quick. We're sitting at 785 homes actively on the market in the month of August. and 230 homes actually sold. We see the buyers' demand tick up a bit, but as the holidays kind of come along, I can see that probably still going in the opposite direction. But we are sitting for the existing homes overall at 3.3 months of inventory. And if we're looking at the new construction inventory, we can also see that starting to tick down. I know out in Canyon County, some of the smaller builders are just kind of stopping altogether because usually they're going to have to go in and take out loans to be able to get their products, to be able to build your home. And unfortunately, with the federal funds rate going up, it just becomes harder to borrow that money. And there's a lot of the smaller builders that are kind of coming to a stop. And even here in Ada and Canyon County, if we're talking about the builders, even some of the majors are starting to cool down and really stop their building in anticipation of what might be happening overall to be able to borrow money if they have to. But either way, the overall inventory is sitting at 3.3 months worth of inventory for 3.64 months of inventory for new construction. But either way, the buyers demand was kind of ticking up a little bit, but I do kind of anticipate that to cool down. So again, who's kind of like the biggest, loser? Is it the existing homes in Canyon County, or is it going to be the new construction? But if we're taking a look into this, again, showing signs of stabilization. Okay, so coming to what our peak was at 425 back in April of 2022, and today we can see that we actually ticked up a little less than about $5,000. And we're kind of seeing maybe this starting to flatline in the existing homes. So total existing homes has lost 4.24% since the beginning of the year when it rose 9%, which would say that we still got another 4.76% to come down if we're going to get back to those levels that we saw since the beginning of the year, which if it's showing signs of stabilization, I really kind of wonder if that's ever going to come across. Is 4.24 or around there going to be about the max value in existing homes in Canyon County that's going to go down? It could be. We'll just have to see how the federal funds rate really kind of shakes the interest rates when they have their meeting coming up next week. So we'll see how aggressive they continue to get. And if we're taking a look at new construction in Canyon County, again, same kind of trend. We were on the downward slope from our peak at 549 in April of 2022. We went all the way down to 491 in July of 2022. And look, we went up a whole whopping $100 in the median home price. But we're starting to see those numbers, the big chunks of numbers, kind of slow themselves the way down. So are we going to see stabilization, maybe return to the new construction? Yes, we possibly could. But since April of 2022 to where we're at today, we have gone down 10.4% in the new construction values here in Canyon County. So if you're looking for a brand new build, I would say that Canyon County is probably going to be your better bet, of course, than what you would find in Ada County, because Ada County really hasn't shifted all that much as compared to what the values did in new construction overall in Canyon County. So if you're looking for a new construction build, either in Ada or Canyon County, please feel free to reach out to me. Would be more than happy to represent you on that purchase. All right, so let's just look at the days on market. Again, we're at 31 days on market. I anticipate that trend to continue to go up as the buyer's demand kind of softens and the holidays come around the corner. But they have been on the rise year over year due to the supply and demand, the influx is what's going on in our economy and interest rates and all of that. And then again, cancels were kind of about the same as what they were last month. Again, maybe just a tick up. But maybe some buyers are falling out of contract due to their financing, or maybe sellers are kind of getting their cold feet and taking their house off the market. So just to go ahead and recap here, the median sales price for Canyon County was $449.90. The total homes sold was 389, which is down 27.4% year over year. But the inventory is up 80.5% year over year, sitting at 1336. And the days on market, again, whopping 121.4% year over year, sitting at 31 days. All right, so let's go ahead and let's continue this conversation by a city by city really breakdown of what is happening here in the Treasure Valley. And let's go ahead and start off with my hometown star, your star realtor, of course. And let's take a look at what's going on here. So let's take a look at the overall median list price that we got. We can basically see up here in this corner that the median list price was definitely jumping down, but we can see that it has kind of stabilized itself over these last weeks that we've kind of gone through. And we can see that it's kind of ticking down, a little bit here over this last week or so. But we kind of seen the trend of stabilization, like return over to star area. Looking at the price decreases too, which is another factor that I looked at, we're seeing that we're sitting at about 62% of the active listings on the market are taking price reductions. But we can also see that number flatlining over the last month or so. And then if we're looking at the market action too as well, which is overall like, sellers or buyers out there buying up these properties, we can see that it's been on the way down. But if we're looking at the last, few weeks since about, mid-August to today, the market action's kind of staying about fair, about almost stabilized, if not ticking down a little bit. But if we look, over at the indicator, their little meter. Okay, they're saying it's encroaching a buyer's market more and more. But this is where they kind of do their own little algorithm of comparing their market action index to what a buyer's market is. And really, as I've said in other videos, especially one video where I said, are we in a buyer's market? I believe that we are, because we're seeing price reductions. We're still seeing back-end negotiations on prices, and we're seeing seller concessions return, which is all indicators that we're in a buyer's market. So do I agree that we're in a slight seller's advantage here in Star, Idaho? I'm not going to say that. I'm going to say that we're in a buyer's market. So let's go ahead and let's look over at Boise, Idaho. Again, Boise in itself was seeing some stabilization, over the last weeks. And it did jump down a little bit, but we can see it's starting to stabilize itself. So it just kind of went boop a little bit and then over to stabilization. But the price decreases, we can see that over in Boise, they're still kind of on the way up. So 68% of the active listings that are on the market right now are taking price reductions. And we can see that the market action over in Boise is still on the way down too, but kind of leveling. So we'll just have to watch that as it goes along. And again, even though they say that we're in a slight seller's advantage, really, I still think that we're in the buyer's market because of basic price negotiations, price decreases, and beating that dead horse, concessions coming back to the market. Taking a look at Eagle, Eagle's been kind of ticking its way down too, and it's kind of more or less was flatlining itself there for a bit, but also took a bit of a hit on the way down as of today. The overall price decreases, we could see that it was really kind of up because Eagle really is generally the most expensive area in the Treasure Valley to go ahead and purchase. So I did expect the price decreases to be heavier, say in Eagle, than other places around the Treasure Valley, and it was. But we could see that, we had our peak, really kind of back, what was it, Friday, August 5th. And, over to today, we still have 60% of the active listings on the market taking price reductions. And we can see that market action on the way down. And I can kind of see the market actions coming down too as we're entering the holiday seasons for all of these cities. So kind of keep that in mind too. But according to their little meter over here, they still say it's a slight buyer's market, but you can see that's ticking towards their meter line as they're looking at all of their data. Meridian has been ticking down too in the overall median list price, and we can see that the price decreases today are sitting at 64% of the active listings that are on the market, and we can see that slope in the market action starting to kind of more or less level itself, but we'll have to pay attention for the holiday season coming up. Kuna was kind of bouncing up and down, but more or less, if you're kind of going back all the way to June 17th, when it really kind of bottomed itself, you can see that the up until today, until September 9th, it's kind of flatlined itself in that market. And same thing with the price decreases. You're seeing 74% price decreases on the active listings out there, but you can see that that's also kind of flatlined itself. And then the market action too has been kind of sweeping its way down at 33 according to their stats. Okay, so since I got this blocking my direction again with my software that I'm using to record this video, let's go ahead and jump over to Emmett and work our way back. Emmett, of course, took its jump down as we saw back, around June 3rd of this year, but kind of flatlined itself, and we can see it's kind of starting to tick on the way back up. And then price decreases are still kind of on the way up at 55% of the active listings in Kuna. And the market action itself is starting to, again, slow down that downward pace. But we'll just have to continue to watch it and see what is going on. Middleton was flatline there for quite some time, really, but definitely took its hit coming up here since August 26th all the way to today. We can see that median list price was definitely on the way down. The price decreases kind of stabilize themselves, since August 19th of 2022, and have since risen to 66% of the active listings on price decreases on the active listings out there in Middleton. And the market action, it's kind of sloping down earlier, and we can see that that's starting to stabilize. So maybe a lot of people are considering, Middleton because of the prices and going out there. Caldwell's been kind of interestingly, it started its declines, and you can kind of see that the stabilization is returning. So again, Caldwell is in Canyon County, so this will be a part of that stabilization, a part that I'm thinking about. Same thing with Middleton, even though Middleton took that dump there. But 69% of the active listings have been taking price reductions, but we can see that number has been kind of stabilizing ever since we were back July of 2022, when it was 68.22%. So we're kind of hovering around 69%, and the market action again is starting to slope itself. All right, and then last but not least, let's go ahead and take a look at Nampa, which is also in Canyon County. Again, it was diving down, and we're still kind of on the downward trend, but we might start seeing those signs of stabilization also returning to Nampa. And if you kind of take a look at the median price of the new listings, you can see that that's kind of jumping up, which can help maybe create that stabilization. But the price decreases, they were kind of ticking up, but now we can kind of see that they're flatlining towards the tail end here. But still, 72% of the active listings out in Nampa are taking price reductions. And if we're looking at the market action overall, we can see it's going down. Again, still on a downward trend, but you can kind of see that downward trend softening as we go along. We will just have to continue to watch and see. And please stay tuned with Mikey's monthly market updates so that you can be in tune with what's happening in these cities individually. So the last thing I want to cover in the big giant elephant in the room is what the Fed is going to do when they meet next Wednesday. What are they going to do with the federal funds rate? Now, to kind of break this down, the federal funds rate does, and which I will explain in the final thoughts again, does more or less kind of hit more of the short-term, bonds, et cetera, and short-term investments than it does, say, some of the longer terms to be able to affect it. But the unified mortgage-backed securities are still kind of on the teeter-totter and considered a short-term investment. So when the federal funds rate does increase, it could rock the mortgage-backed securities, which we do know that when the value of the mortgage-backed securities goes down, interest rates go up, and then the vice versa. When the value of the mortgage-backed security goes up, we can see the prices or the interest rates on your mortgage go down. And of course, the 10-year Treasury yield and the 2-year Treasury yields are really good indicators, but the federal funds rate will affect the 2-year Treasury yield more than it's going to affect generally the 10-year Treasury yield overall. But there is that correlation. But what really kind of rocked the markets, and if you have been paying attention to, say, like the Dow Jones, NASDAQ, and the S&P 500, wow, did they take a hit yesterday when the inflation reports came out, the CPI, Consumer Price Index reports came out. It really rocked investor confidence because they're like, well, they don't have it under control, and they're going to have to get a lot more aggressive. So they were positioning themselves and putting themselves in defensive positions over the last couple of weeks, hence why we saw the interest rates on mortgages going up. But that news really kind of rocked what was going on. Now, the Fed will look at core CPI, okay, a little bit more than they're going to look at the CPI, this Consumer Price Index in itself. But if we're looking, say, year over year, we know that last month, the previous month, we were sitting at 8.5% inflation, and we can see that the inflation kind of ticked down a little bit to 8.3%. But is still kind of saying, hey, Fed, you've got a lot more work to do than what you've been doing. And the federal funds rate is their biggest weapon in order to tame inflation in this country. But what they look at more than they look at just the CPI year over year is they're going to be looking at the core CPI. And we could see that it was at 5.9% last month. This month, it was on the rise to 6.3%, which is really what rocked investors around, and even probably rocked the Fed. They were like, wow, our measures are still not strong enough. And yeah, they're not. So there was talk about whether or not they were going to go up at, half point or 0.5% when they meet next week, or 0.75% when they meet next week, which is what they've been doing in the last couple of meetings. Well, this 0.75, I definitely think is on that tick, but there's also been, or it's what's going to happen, is they're going to go up 0.75%, but there's also some talk up there that they can go up a full point, 1%. Okay, and that just means it costs more for people to borrow money, and it discourages you from going out and getting new loans for the products that you are looking for. So again, keep that in mind, is that it'd just be more cash out of your pocket to go and buy stuff as say where you could go out and get a loan, cheap money for whatever product that you want to buy. So the key here is that the Fed does not have a control over this. Honestly, they were saying, we can keep ticking up and come in for a soft landing on the economy itself. But this data is really kind of showing that their soft landing, I think personally, is really kind of not in the cards at this point, and we'll see that an inevitable recession. And when we do see that recession, we do know that historically rates will come back down because they need to stimulate the economy. So buyers, keep that in mind. And honestly, I kind of see maybe the effects of the recession starting after the midterms in November into Q1, or maybe even early Q2 of next year before we kind of start seeing these rates fall. So buyers, keep that in mind. If you're out there, you got a choice to be able to buy the property of your dreams. And even though you'll have to take, basically the hit on the interest rate right now, and you'll feel a bit of that pain, but once a recession hits and those effects and those rates come back down historically, then you can refi for free to little or no cost, and you get the best of both worlds. So you got the house that you wanted in a buyer's market, maybe concessions towards your closing costs, all of that, plus eventually you'll be able to refi down. So really it is a win-win. Buyers, keep that in mind. This, even though the interest rates are high, sitting at 6.3% today, it is still a good time to go out there and buy. So don't be discouraged. If you're looking to buy, call me today. But we're going to go ahead and get to the final thoughts right after this. You'll probably hear me repeat this in the buyers section, but either way, thank you so much. And let's go ahead and dive into the final thoughts. Well, thank you very much for going through all that data with me, of course, as I like to say always. But welcome to my final thoughts section in terms of what I think is going to be basically happening for buyers, sellers, investors, and renters down the way. So buyers, let's go ahead and let's start off with you. Of course, we know the Fed, and as we discussed during the data section, has to get more aggressive. The CPI, which is our inflation report, or the Consumer Price Index, came out this last Tuesday. And really, did the overall inflation kind of cool down from the 9.1 that we had saw earlier in the year? Yes, it did. But the core inflation is what rose, and that's more of a main indicator for the Fed in terms of their position of what they plan on doing with the federal funds rate. Now, the federal funds rate is more or less designed to go after short-term treasury yield or treasury bonds, etc., anything short-term. More than, say, like the long-term 10-year treasury yields. But the 10-year treasury yield is still going to take the federal funds rate in terms of the overall health of our economy. Now, the UMBS, or the Unified Mortgage-Backed Securities, is kind of considered more or less short-term. So can we see some effect coming from the Fed when they raise the federal funds rate here next week in terms of the overall mortgage rates that you can expect to pay in interest? Right now, as of today, they are sitting at 6.3%, which actually is the highest now that we have seen since June of this month in 2022. And do we anticipate them to go up? Yeah, most likely. But does that mean that that's the end of the world? Does that mean that these rates aren't going to eventually come back down when a pending recession hits? Because if you do subscribe to this channel and you have been watching, you do know that when historically, when recessions hit, rates will come back down. So what is good for you buyers right now is that considering that the buyer's market, of course, is still continuing to cool off, inventory is still up there, it means that you can go out there and get the home of your dreams with no fight that we had, say, like about a year and a half ago here in the Treasure Valley. So you can really be and pick and choose. Plus, we're also in a buyer's market, which means that we can still probably negotiate even more on prices, considering even the record price reductions that we're seeing around the Treasure Valley. Plus, concessions have generally returned. So what does concessions mean? It means that we can get your closing costs covered, or maybe you could use that money towards buying down your rate, whatever it is you decide to do. But if you do decide to buy down the rate, pretty much as I can almost guarantee is that the Fed is not going to be able to come in with their soft landing that they expected. So I do expect the recession or the effects of the recession to probably hit maybe after the midterms into Q1 or Q2 of next year. So that means, yeah, are you going to have to end up paying, more as it's coming along for your overall interest rate and your payment for that period of time before the rates come back down? Yes. So you are going to feel a bit of that pain, but you'll be able to get the home of your dreams and you'll be able to kind of ride this out and without the fight and be able to get concessions and take advantage of this buyer's market. And then when the effects of the recession eventually hit, you'll be able to refi for practically, if not free, and it's a win-win across the board. So buyers, do not lose hope. Buyers, this is really a good time to come out and buy. All right, sellers, it's your turn. Of course, as we know, the days on market from the data have been increasingly going up year over year. And we do know that the buyer's demand has been really cooling. It's been cooling. Which is just putting more inventory out there on the market because there's not enough buyers to be able to soak it up. Like say that we had a year and a half ago where the buyer's demand superseded what was available in overall inventory. So there is more competition out there for a like house like you might be trying to sell. So you got to keep that in mind. So the keys here for properly selling your home for the most amount of money possible and in the quickest amount of time possible is going to be appropriately pricing your home. Maybe if even coming under what fair market value is just a bit in order to attract the buyers to come to your property to be able to buy it. Again, if there's buyer's agents out there, they're going to be running CMAs or comps on your property to see generally where you're kind of at. And some of these buyers, considering what is happening in the market, etc., are almost expecting you to come in with price reductions. We do know that we are in a buyer's market, so you might also have to entice some of these buyers with concessions. Say, for example, maybe offering closing costs in order to make your home that much more attractive than, say, a comparable property around your area or maybe even in another city. So sellers, marketing is also the key. That is something I've got down pat. Basically, and I can promise you this, if there is a way to be able to market that property, I know about it. So sellers, I would love to set up an appointment with you if you're thinking about selling and you want to sell for the most money possible and in the quickest amount of time possible. Feel free to reach out to me. Be happy to set up that appointment, which usually takes about 15 to 30 minutes. And we can go ahead and discuss the best strategies and the best marketing strategies, etc., that I have for you to be able to do that and accomplish that goal. So sellers, I look forward to hearing from you. All right, investors, it's your turn. Especially if you are coming in with cash and you're looking to buy up, say, rental properties around here in the Treasure Valley, now really is a good time because property values have been coming down. As we saw, Ada County took a pretty significant hit this month in the overall median home price values. But Canyon County is actually starting to show, again, some signs of stabilization. But the prices have been coming down. So if you're out here buying in cash, you can still get yourself a good capitalization rate too at around 3-4% or maybe even higher, depending how much money that you are putting down. If you are coming out here and you are trying to get a mortgage in order to go for secondary property, just keep in mind that the mortgage is going to be a little bit higher because it is a secondary investment property that you got. It's not a primary. So they will raise the interest rates on you a bit. And their interest rates, yes, are they high? But again, as I mentioned with the buyers, when the effects of the recession eventually hit here, I could totally see you coming in and refining down for practically nothing or too free to be able to save your money there and be able to increase your overall gains. And keep in mind that rents are still going up because inflation is going up too. So it's really kind of a good time. But the more money that you are going to be putting down on an investment property, it's going to be the better if you're looking to do it on a mortgage aspect. If you're in the flip game, keep in mind, more inventory. So you might be able to go out there and be able to find the properties that you're looking for to be able to make a decent profit. But keep in mind, just like with the sellers, the days on market have been on the way up, etc. So just, again, it's the patience game when it comes down to selling your property and appropriately pricing the property to maximize, of course, your potential profits and to be able to track the buyers that you're looking for. All right, and lastly, renters. Of course, as I say throughout every single Mikey's monthly mortgage update, you are actually paying 100% interest because unfortunately you are fitting the bill, more or less for your landlord. But if you have the means and the capability, again, I would refer you over to the buyers section here. Do not let the interest rates where they stand really kind of affect you as per se. Again, you do have more choice out there to be able to go out and look for the property of your dreams. And then again, just have to go ahead and wait after you purchase and kind of deal with the pain, for a bit until those interest rates eventually come down when the effects of the recession eventually hit, which I think that they are going to. I don't think that the Fed's going to be able to go into their soft landing like they really want to. So renters, good time to put yourself in a position to get the down payment that you're looking for. Good time also to talk to a mortgage lender and start setting this up. Start setting the foundation for your eventual purchase, maybe down the line, or maybe if you're there, talk with the lender and see what program is going to be best for you to be able to get into a property and start earning like you should be. All right. Well, thank you very, very much, everybody, for taking the time again out of your day to watch this video. I hope you did find all the information useful as we went along. And of course, if you're looking to buy, sell, or invest right here in the Treasure Valley, please feel free to reach out to me. I can be reached at 208-715-STAR. Again, that's 208-715-7827. And of course, if you're looking to begin your home shopping experience today, please feel free to visit my website at www.yourstarrealtor.com. Also, if you're looking to move right here to the Treasure Valley from out of state, please click in the description below. Download my free relocation guide so that way you're in the know before you decide to make the move. Also, please hit that subscribe button below, hit the notification bell so that you're constantly in tune with all the videos that I do come up with, and I look forward to the day that we speak. Well, thank you so much again. God bless everybody. Until the day I call you my neighbor, we'll talk then. Thank you so much. Bye-bye.